Good evening, YouTube. How's my family doing tonight? Hopefully everybody had a wonderfully blessed day today. And hopefully you guys were in the green today, because this guy was not. I was in the mother red, as you can see by my account. This is Robin Hood and Stock Tactical Muhammad G. That be me. For those of you that don't know, well, now you know. I'm definitely not your financial advisor. If I look like I'm, well, I'm not. So go find one. No, I'm joking, guys. I'm just merely sharing my thoughts and opinions, because I invest in the stock market in my Robin Hood account. If you guys can do me a big solid, man, you guys can maybe give me a fat thumbs up. Help me out with that YouTube algo, guys. Maybe subscribe and maybe hit that notification bell, guys. You know what I mean? It's free, guys. It helps out the channel. And you know what I mean? I do my due diligence, guys, and that's, you know what I mean? I take quite a bit of my time out of the day to make these videos. I know I don't have a lot of subscribers, not a lot of viewers, guys, but I will get those in time. I will continue to make these videos. You guys keep counting me out, man. It's all right. You know what I mean? I will continue to make these videos. Guys, the stocks that I be putting on your radar, they be going up in price, guys. Your account would be going up. You know, granted, yeah, the market's been a little volatile. It's been a little red the past week or two, guys. So some of these, you know, the stocks are up and down, guys. But hey, it is what it is. That's how it is when you invest. But nonetheless, a lot of the stocks I've picked, guys, have gone up in price. You know what I mean? You know, I just want to say that. Don't count this guy out, man. I know, you know what I mean? I'm not a veteran like a lot of these other YouTubers that talk about stocks or have all these subscribers, guys. But I will in time. Mark my words. You know what I mean? Without further ado, let's get it. All right. ZYNGA. ZYNGA is who we're going to be talking about today, right? They are basically a mobile app company, right? Not a mobile company. A company that does games on your cell phone, right, guys? And they're actually going to make a game now for Star Wars for a Nintendo Switch, right? That came out today, and that's why they shot up today, guys. They hit their 52-week high today, right? Their all-time high was today for $12.30. Then they hit that level of resistance at $12.30, right? Because that's their first level of resistance. Actually, it's $12.30. And that's where they actually got rejected, was at $12.30. And they got smacked back down to $12.10, guys, where they're currently sitting at right now is $12.10. But, guys, I think this company has plenty of potential. I think a lot of people are actually sleeping on this company. And, guys, when I let you guys know how much billions of dollars are actually invested by institutional investors, yeah, billions of dollars, guys, not millions, billions of dollars in this company, right? Yeah, this company's only a $12 company, or not $12 company. It's only currently going for $12, man. But don't let that fool you, man. This company, I think, is a sleeping giant, ready to come out and play. That's why I want to put it on your radar, guys, so we can both make them gains. You know what I mean? So, ZYNGA, who are they? ZYNGA is a U.S.-based company that develops, markets, and operates social games, live services played on mobile platforms such as iOS and Android, and social networking sites such as Facebook. ZYNGA generates revenue through mobile game downloads, in-game sales of virtual goods, and advertising services. ZYNGA's revenue is divided between online games and advertising and other, where online games accounts for the vast majority of revenue. The firm's top 3 games account for the majority of its online game revenue. The company invests in several game categories such as social casino, including Zynga Poker, casual, including Words with Friends, action, strategy, including Empire and Allies, and Invest Express, including Farmville. Like I said, guys, they're actually making I believe by the end of this year, if not sooner, they're making a free-to-play game for Nintendo Switch. And the news just came out today. You can see it on your Robinhood app, right? You'll see it. The news is on there, guys, if you want to go read it yourself. But that's why they shot up today, guys, when the market was most of the market was red. These guys were green. ZYNGA was given a buy rating, right, by Wall Street journalists, with the price target of $15 by year's end of 2021. I definitely think, not definitely, I believe, in my opinion, that it'll definitely hit that $15 sooner than the end of the year, in my opinion, right, guys? And a price target of $24.46 by 2025, which is a 101% return by the end of 2025. Its first level of resistance is at $12.30. Like I said, guys, that's where they were at today. They got smacked back down to $12.10, guys, where they're currently sitting at, guys. And their second level resistance is at $12.49, right? And that third level is at 1277. And after that, it is to the moon, press discovery, as we say. And, you know, hopefully it'll go to the moon if you're invested in it, like I am. I picked up 25 shares today, guys, right? The market was red today. Most people don't like to go shopping when the market is red. When the markets are red, guys, that is when you find opportunities to buy the dips. And you got to have that dry powder, right, guys, which is another word for saying money. And it has your buying power, right, guys? Your buying power is another Wall Street terminology. It's called dry powder. For those of you that don't know, now you know. But anyways, guys, you want to shopping. You want to go shopping when the markets are red, guys, right? Buy those dips so you get good deals, right? Dollar cost average. And you buy the dips, right, guys? Don't be scared, man. It is scary. I know for some of the newbies, you know, it could be a little scary and frightful. Even me, right? I've been doing this for about a year now. Even I still get a little shooken when the market gets red, and I want to sell, and you know what I mean. Your emotions start getting all over the place, right, guys? Key is keeping your emotions in check, man. You gotta be emotionless in this game, man. It's a dog eat dog world, man. Dog eat dog world. You will get chewed up and spit out, guys. Do you know that the Wall Street and hedge fund guys, they call us us retail investors? You know, they actually call us dumb money, that our money is dumb. Did you know that? Go look it up on Google. It's actually, you can find it on Google. That's not me just saying that. They think us retail investors are stupid, guys. They think we're dumb. And they consider our money dumb money because they think we make dumb moves, right? Because to be honest, a lot of us retail investors, when they see the market in the red, we panic and we sell, right? That's when you don't lose until you sell, guys. Even though your account has gone down, you don't lose until you sell, right? Because you can always make that money go back up. You can make your account go back up, guys. You know what I mean? Believe me, I'm preaching to myself as well. You know what I'm saying? Because it's hard. It's hard to not want to sell when the market's red. All right, well, let's get back into it. Okay, guys? So now their first level of support is at 1182, guys, right? That second level of support is $11.54, and if it continues to dip anymore, well, that third level is at $11.30. Guys, I don't think this is going to even go down anymore, you know what I mean, than what it's sitting at now. Can it go down more? Of course it can, right, guys? You know what I mean? But like I said, maybe down to that first level of support, which is at 1182, guys. But I you know what I mean, if anything, maybe down to there. But I think it's going to continue to climb on up, right? Just my opinion. It's not financial advice. Okay, right? They are, like I said, their 52-week high was at $12.30, which I just shared with you guys, right? And that was today, and I think it's because they had put out that news, like I said, about making that Star Wars game for the Switch, guys, right? Zynga's earnings, right, are forecasted to grow by 62.84% per year, right? They have exceeded the U.S. market, which returned 27.8% over the past year, as opposed to the 68.5 per year for Zynga, right? If you would have bought Zynga, guys, 5 years ago, you would have had pocketed a 502% gain today. Not too freaking bad, right? For a $12 company, guys. 5 years ago, if you would have invested $1,000, you would have got 502% gain on that $1,000. Do the math. I'm not going to do it for you. Maybe leave it down in the comments down below how much that is. That's quite a bit of money, right, guys? Right, Zynga is forecasted to be profitable over the next 3 years, which is above average market growth. Right, they have sufficient cash runway for the next for more than 3 years, guys. They have cash runway for 3 years. Most companies have it for 1, maybe 2 years at the most, guys. These guys have cash runway for 3 years, which is freaking excellent, right? Institutionals own a whopping 79.3%, guys, which is 855,140,143 million shares. That's how many shares are owned by institutional investors. That's a freaking lot of shares, guys. A lot of money as well, right? The general public owns 14.4%, and individual insiders own 6.3%. Right, guys. Vanguard owns $1.1 billion, guys. Billion. They own $1.1 billion worth of freaking shares of Zynga, guys. That's a lot of freaking shares, right? They're actually the #1 holder of shares, right? Is Vanguard. right? And then you have BlackRock, who owns $676 million worth of shares. Okay, guys? Then you have Goldman Sachs, who owns $151 million worth of shares. And get this, 2 days ago, Morgan Stanley bought 559 shares. Do the math, right? 21,000 shares, guys. 21,460, or I'm doing my math all jacked up. Over 21,000 shares, guys, Morgan Stanley just bought. And just today, you had over 13 different hedge funds bought over a combined 7 million shares, guys. Just today alone, they bought that. Add that to all what the institutional investors have put into this company already, right, guys? And there's still plenty more of institutional investors that I didn't even mention, right? I'm just talking about the big dogs that a lot of us know, right? So that is a whopping, what is it? That's like, let me do the math here. That's over $2 billion worth of, $2 billion, guys, with just 4 of these companies, with the Morgan Stanley, Goldman Sachs, Vanguard, and BlackRock. Just them 4, guys. That's a little over $2 billion worth of shares. That's not including these 13 hedge funds that just bought shares today, right? And all these other institutional investor guys. Man, obviously they know something, right, guys? Something's going on with this company. They have this much major money, and as I always say, guys, if institutional investors are investing in the company, they obviously see profit, and they know stuff that we don't know, guys. But if they're putting that much money, guys, billions of dollars in a company, yeah, they know something's up. You know what I mean? That's why I picked up 25 shares. You know what I mean? It's not financial advice, but you ought to do your own research, guys, and check these guys out. You know what I mean? Just 3 days ago, ZYNGA released an annual result, right? Their annual results, right? And things are looking extremely bullish, according to two Wall Street journalists. Their revenue of $2 billion beat the forecast by 2.3%, guys. Their revenue, $2 billion, right? Statutory losses of 0.42 cents per share were 2.4% smaller than analysts expected. 11 Wall Street analysts expect a forecast of $2.67 billion in revenue for 2021. $2.67 billion, guys, in revenue. It's a lot of freaking money for this company, which would be a 35% improvement in sales compared to last 12 months. ZYNGA reported $699 million in the fourth quarter, topping analysts' $677 million, guys. Analysts thought they were going to make $677 million for fourth quarter, but they made a whopping $699 million, guys. They just slapped them guys around, said, man, shut up. You know what I mean? They also reported a doubling of monthly active users to 134 million active users, guys. Sorry, 134 million active users, right? Doubled. It's crazy, right? And ZYNGA is forging ahead with recently announcing plans to make games for more than just mobile phones and tablets. They just announced today that they will launch a free-to-play Star Wars game for Nintendo Switch, right? In addition to Android and iOS devices, right, guys? They mainly make games for cell phones or tablets, right, guys? But now they're stepping up their game. They're going to be making games for consoles such as the Switch, right? Hopefully, you know, PS4s, who knows, right? But nonetheless, right, they're trying to make more money and stepping into new charted territories, such as making a game for Switch, right, guys, which was bullish news for them, and that's why they shot up and hit their 52-week high, like I had said about 3 times. Right, Morgan Stanley said it sees the move as important to see and test ZYNGA's ability to pursue new growth opportunities, right, which will help lay out a bull case for ZYNGA. Okay, guys, ZYNGA, let me see here. Oh, yep, that's all my notes, guys. Oh, I just wanted to read one more thing for you guys here, right, guys? And then I'm going to wrap it up. I don't want to be too long, just long enough, as I like to say. Let me open up one of my iPads here. I got 3 iPads, guys. It says ZYNGA looks to... Oh, no, that's not the one here. Here, I got 3 iPads here, guys. I'm trying to see which one I had my notes on. Bear with me, guys. Bear with me. Okay, it says ZYNGA expects its mobile gaming power to grow more than 30% in 2021. All right. Hopefully you guys are doing great, guys. It says Zynga is making some serious hay right now. The mobile game leader capped off 2020 with a 52% year-over-year increase in revenue during the fourth quarter. It also issued more convertible notes in December for net cash proceeding of $794 million, leaving it with $1.57 billion in cash. In cash, guys, and short-term investment of at the end of the year. Mobile has become the largest market in the global video game industry, a trend reinforced by the pandemic. But Zynga is more than just an investment in a stay-at-home consumer. The company is flexing its muscles and looking to expand in new areas, like I said, like making the game for the Switch, making it a top growth name in the video game world. 2020 by the numbers, it says, boosted by its acquisition of Peak and Rolex game producers earlier in the year, there was plenty of organic growth to an ever-popular franchise like Wars with Friends. New puzzle game launches and live events kept users coming back to play. Advertising, which has become a minority share of total revenue, also rebounded strongly after the market freeze last spring at the onset of the pandemic. In total, it all equated to 120% year-over-year increase in free cash flow in fourth quarter to $197 million. Good for a very healthy cash flow profit margin of 32%. Zynga had a great 2020. Regardless of the pandemic, these guys had a great 2020, guys. Not a lot of companies can't say that, right, guys? But these guys can. Mobile games were more popular than ever before, giving it a serious momentum as it enters 2021, right, guys? And there was a change of 49%, right, from 2019 in their revenue, guys, right? 49 difference in percent. In 2019 they had $1.32 billion, and in 2020 they had $1.97 billion, right? Their adjusted EBITDA, right, in 2019 was $87.2 million, and in 2020 was $266 million, a whopping 205% difference. That's a lot. And their free cash flow, guys, in 2019 was $239 million. 2020, $410 million. 72% difference, guys. These guys are obviously doing something. They're flying under the radar, guys. A lot of people probably don't even know about these guys. Put them on your radar, guys. I think this is going to be a great one, right? Like I said, games, mobile games, and on your cell phone and stuff like that, guys. It's just gaming in general, guys, whether it's cell phones or, your PlayStations or Switches or whatever, Xbox, guy. Man, I got a buddy that has a son that's a professional gamer. I didn't even know there was a such thing until last year, guys. It's a billions of dollar market, right? I don't have the actual number. Maybe you guys can leave it down in the comments to let me know if you guys know what the actual the numbers are for the dollar numbers of what gaming is supposed to be. It's supposed to continue to grow and grow and grow, right, guys? It says, let me see here. Yeah, it says, live events and cross-platforms play are Zynga's future. A few years ago, Zynga was a small mobile game publisher struggling to gain traction. Today, it's a fast-growing business with an even faster expanding bottom line. Zynga said it will use its momentum to make further acquisitions in the next couple of years to gain greater scale in the important game market. Specifically, management said to expect revenue growth of 32% for a full year 2021 and a low double-digit percentage growth on top of that in 2022. I'm almost done, guys. Live events, new advertising technology, and new games titles from Peak and Rolex will be important parts of the strategy over the next 2 years, but the mobile leaders is eyeing some new trends too. Specifically, management said several cross-platform games, multiple player games that can be played together by users of various devices, or developed. Cross-platform titles have been big hits in recent years. Think global free-to-play sensations Fortnite or Minecraft. And Zynga sees potential to expand here. It already has key cloud computing relationship established with likes of Amazon Web Services and development platforms Unity Software, who has another. They make games, guys, the Unity Software, to make its push into cross-platform titles, along with its recent publisher acquisitions and the promise that other takeovers are under consideration. It will be interesting to see where Zynga goes next. Like the company's chance, even after a busy year, Zynga has $283 million in net cash, an equivalent on its balance sheet, and large, steady stream of free cash flow generating. Where'd I go? There I am. I don't know why, man. My phone's tripping. Oh, man, guys. Uh-oh. Where'd it go? Where'd it go? All right, guys. All right. And then it says, yeah, it says, like, I like the company's chances. Even after a busy year, Zynga has $283 million in net cash and equivalents on its balance sheets and large steady stream of cash flow generated coming in each quarter. Still, smallish company with a market cap of just under $13 billion and trading for 31 times trailing 12 months free cash flow. Zynga looks like a long-term value after its final report of 2020. Guys, like I said, put this one on your radar, guys. You know what I mean? I think this one's going to do great. And I mean, there's plenty more bullish news here, guys, but I don't want to take long. I know my videos are always long. But this is Robinhood and Stock Talk with Muhammad G. If you found this video useful, guys, please like and subscribe. Hit that notification bell. Guys, it's free and it helps out the channel. You know what I'm saying? Peace! Hope you guys have a great night. See you tomorrow.